Good evening, everybody. I'm going to go ahead and get us started. For those of you who have not attended before, I'm Katie Mullering. I'm the Adult Services Librarian here at Emmett O'Neal Library. I'm really glad you're here. This is the second in a series of general seminars on finance and investing that are funded through a grant from the American Library Association and FINRA, which is the Financial Industry Regulatory Authority. And these grants, this grant program is going to last through May of next year. So there'll be a seminar on the first Thursday evening of each month right here in this room. Next one is December 1st, and it's on saving and investing. So we've already done sort of a general program. Tonight is banks and credit, and the next one is saving and investing before we get into the more serious investing topics in 2012. Also, Saturday, we're going to have a special seminar on women and money. And the point of this is to bring together women in a small group setting and be able to talk about where we are with our money, how we're going to plan to use it, and then we'll do a session on saving and ways that we can save, and also a session on investing. So we'll look at appropriate saving vehicles and investing vehicles, and we'll talk about how we want to manage our finances in various stages of our lives. So that will be another free seminar this Saturday. It starts at 9 o'clock and goes till 12:30. So if you're interested in that, let me know if you haven't already registered, and I can sign you up for that. Right now, I'm going to turn us over to Dr. Raudikus. He's a professor of finance at UAB, and he is going to take us down the road of banking and credit.
Katie. Well, good evening. I see a lot of faces that I recognize, so I'm glad I didn't run you off the last time I was here. That's a good sign. That's very encouraging. Well, tonight, as Katie mentioned, we're going to talk about banking and credit. So before we get to this, so that I do not get in trouble with FINRA, you get the usual disclaimer. I'm not an investment advisor. I do not hold any licenses. I do not do this for a living, and I do not give any investment advice to anybody. If you ask me, I have just to tell you that I can't give you any advice. So, and as I mentioned before, if I knew how to do this, then I would be somewhere enjoying the fruits of my labor. So therefore, just usual disclaimer. Now, what are we going to do tonight? We're going to talk about banks and we'll talk about credit. Two very important things. Banks obviously have been in the news a lot, and so have credit cards. So credit in general is always a very important topic. It's always very important to know the basics of banking and the basics of credit. So this is effectively what we're doing. What kind of bank accounts should you have? How do you find the right bank? What is a credit report? Where do you get it? What's the credit score? How do you interpret it? And how do you deal with your credit cards? So let's start with the banks. Very basic. Now, when we talk bank, we think of all kinds of different institutions. Now, a bank, when we actually, in the sense of the law, is an institution that accepts deposits and makes loans. If you only do one thing or the other, then you're not a bank. You know, by regulation or by the letters of the law, you're not a bank. You have to do both sides of the business. There's a lot of institutions out there that only make loans but don't take deposits. There's also people out there that take deposits but don't make loans. You have them either way. Now, the institutions that we talk about tonight are banks. Your regular bank that, you know, your Regions or Wells Fargo, but you could also look at credit unions and savings banks. For your purposes, they all do the same thing. You know, when it comes to the individual in terms of their banking needs, it really does not matter if it is a credit union, a savings bank, or a regular bank. They all pretty much offer you the same products. One of the things that we'll want to get to tonight is to come to the understanding that a bank is just like any other business. And sometimes people get a little scared of banks, or they think there's something very special. They're not. They're selling you a product. Just like your grocery store sells you a product, the bank is selling you a product, and you should go whoever sells you that product at the lowest price. There's no difference for a bank than there's for any other product, and the same is true if you're not happy with your bank, you go to a different one. Now that's one of the things that I've been preaching that for years because people just don't do that. But you know, the banking system and banks would work much better if people actually take their business elsewhere if they're not happy with what the bank is doing. But how do we need a bank account? One of the things that I actually did not list on here because it doesn't really apply to most of you is that you need a bank account to exist in the credit world. Now we're going to talk about credit cards as well. If you do not have a bank account, there's no record of you in the world of credit. And therefore, not being known in the world of credit is worse than having a really bad credit. Because if you have no credit, that's worse than bad credit. And so the way you establish credit, the very first one, we always tell high school students, open an account. And you ask people, okay, raise your hands, how many of you have an account? It's about 10% of the kids have an account, 10, 15, 20%. Everybody should have an account. Even if you don't use it very often, you should have a checking account. Because that establishes a record for you. Now again, for most of you, that's not an issue, but there is a population, about 20%, not quite 20, 15% of the people in this country are not banked or unbanked, meaning they do not have any bank account of any kind. And that's a problem, because one of the things is safety. My grandmother didn't trust banks, and she would have money under her mattress, literally. Now she lived through two major inflations. I'm originally from Germany, so she lived through two major inflations. She had all kinds of traumas about this. But it took me quite some time to convince her your money is better off at a bank than under your mattress or under your sofa cushions. It is actually better there. It's more convenient. They keep records for you. That it's safe. They can help you with your financial future. They do give you advice at the bank also. So there's a whole bunch of reasons why we should have a bank account. The most important account that everybody should have is a checking account. Everybody should have a checking account. They're becoming much more important than they used to be. For example, most employers today require to have your paycheck directly deposited in your account. So you need to actually have a checking account if you have a job. You know, the days of employers sending you a check are over. It is much more convenient for an employer to directly deposit your paycheck. It is cheaper for them. It is safer for everybody. That way, checks get lost. If it's directly deposited, you also get it fast. You don't have to wait for the checks to clear and so on and so forth. So everybody needs a checking account for everyday transactions. If you're writing checks, if you're withdrawing money at an ATM machine, if you're paying your bills, using a debit card, whatever it might be, you need to actually have a checking account to do these things. Without a checking account, you can't do that. You are a cash-only person if you do not have a checking account. And which also means that you actually have to carry that cash with you all the time. And again, that goes back to it's not a safe way of doing business. On the other hand, we have savings accounts which pay some interest. Checking accounts pay very, 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 very little interest. Some of them do. Most of them don't pay you any interest at all. And until a few years ago, by regulation, they were not allowed to pay you any interest. Banks were not allowed to pay you interest on the checking accounts. They are allowed to do that now, but they still don't pay much for them. Savings account, they will pay you some interest on your balance. The trade-off is that there are limited withdrawals. Now, with your checking account, you can write as many checks as you want to. You should obviously not overdraw your account, but you can write as many checks as you want to. The amount of ATM transaction that you can do is limited, but as far as writing checks is concerned, is unlimited. Check writing, for savings account, it's different. There is a limit. There's a certain amount of withdrawals that you can make per month, and if you exceed those, then you're going to get a warning from the bank. And sometimes when you continue to do that, they just convert your savings account into a checking account, because there are warnings that you cannot do this, you can't continue to withdraw money from this. There's only an X amount. Normally it's six a month, depending on the product. And if you exceed those, They will warn you once, next time they will convert that account into a checking account, which means you're not earning the interest anymore. So there is a trade-off. You get more interest, you have less things, less flexibility with the account. Very important. How do I find a bank? As I mentioned, it is a business, so you want to shop for it. Now, one of the things that you will notice if you actually actively do that, and you go to every bank's website, every bank that you can think of, and you're looking at all the different products, if you're just looking to open a checking account, one of the things that you will find is that they're very, very, very similar. So you will not find a bank that is like way out there and offers very different services from everybody else with a completely different fee structure. You're not going to see that. These products are all pretty much the same. It's a very homogeneous market. A checking account is a checking account. One of the things about banking, it's a highly regulated industry. So therefore, they can't just do whatever they want to. There are rules and regulations that tell banks exactly what they can and what they cannot do. There were times when there were less rules, and there are times there were more rules, and it goes back and forth. But there are rules on what banks can do and what they cannot do. So the products that they offer are very, very limited in terms of scope, in terms of flexibility that they have. So you want to look at what are the account features. And the account features is, how many checks can I write for free? That's pretty much the biggest thing. What are the fees that I have to pay? Normally the fee structures are many tiered, which means that you might get it for free if you hold a higher balance, average balance in your checking account, or you start to pay a fee if you hold lower average balances in your checking account. That depends. That's different from bank to bank. But again, the differences are not that significant. They really are not. So what it comes down to is branch and ATM location. What's most convenient to you? Is it the bank that's right down where you live, or is it the bank that's right there where you work, for example? Or is it a bank that is open on Saturdays? That's the only day when you can do it. Maybe it's a bank that has a branch in a grocery store where you shop every Saturday or even Sunday. Because banks that have branches in a grocery store, they actually tend to be open on Sundays, at least for a couple, 3 hours for your basic banking needs. Maybe that's the kind of bank you're looking for. ATM machines, the same thing. Normally, if you withdraw money from an ATM machine that is not your bank's ATM machine, you're going to be charged a fee. So you might want to look for a bank that has a large network of ATM machines if you use those very frequently. These things we want to look at sometimes. You find a bank, and what happened to me when I first moved to Birmingham, I found a bank, and then 4 weeks later they had to close the branch. So therefore, then the next branch wasn't quite as close to my house anymore. These things happen. In particular, banks these days merge all the time. Banks come and go. There's been a lot of movement, a lot of flux in that industry. When are they open? Very important. We all have to work. We all have certain times when we go and certain times when we cannot go to a bank. So when are they open? It's really, you have to think, this has to be convenient to you. It doesn't have to be convenient for the bank. It's very important. It's your money, it's your product. They want your business. You're not doing them a favor if you give them money. So they're in the business of doing certain things. And one of the things that they do is they want to give you loans. But in order to give somebody loans, they need your money first. That's how this works. If you do not put any money in the bank, they cannot give it to anybody. So therefore, they want you to give them they want your money. So they will accommodate you. And they will be very nice to you when you come in there and you want to open an account. It is a business. You do not have to be intimidated. They want to sell that product to you. And again, if you don't like it, you have to voice that to them and tell them and complain, and you will be amazed what they're willing to do for you. It is a business. It's just most people don't look at it. You're much more likely to complain to any other business that you do, that you have a business relationship, than you're willing to complain to your bank for whatever reason. But you complain to them as much as you complain to anybody else if you're not happy with their service. You need a photo ID. Some of these things have gotten a little bit more difficult since 9/11. In terms of the Patriot Act, so you actually have to have a photo ID to open an account. You have to initially deposit money. There has to be some acceptable credit history in terms of getting some of the extra products, like a debit card, for example. If you do not have an acceptable credit history, they might not give you a debit card. Sometimes you can also apply for a credit card with the bank. Again, if you don't have a credit history that is acceptable, then they might not give you those. They will always open the account. They will always open the account. They will always give you some checks. And you have to put in an initial deposit. All of this, they will do. And all of these things have gotten much easier. Today, when you go to a bank, they give you a temporary ATM card or a temporary debit card. So you do not have to wait 2 weeks before the permanent one comes in the mail before you can actually use it. They will give you a temporary one, they activate that, and then a couple of weeks later, you get your actually permanent card. They give you a set of checks. And businesses actually accept those now. There was a time when your check said 1001. Businesses would not accept it or were reluctant to accept because they knew that was the first check in the checkbook that you ever gotten. So, so they were a little reluctant to actually accept those. None of these things really happen so much anymore because we've made a lot of progress in terms of making sure that people do not withdraw their accounts. When I have a bank account, don't allow others to access your bank account. Hold on to your ATM machine, ATM card. Hold on to your account number. Don't tell people your account number. Don't write it down somewhere where everybody can see it. Now, these are all some very basic safeguarding instructions, like when you go and get money from an ATM machine. But they do have these little mirrors on the so you know that if somebody's standing behind you, make sure there's not somebody standing right behind you when you're putting in your identification number. Some basic things, but you have to think about those because if somebody gets that PIN number and gets a hold of your card somehow, they can just take the money out of your account. If they know your account number and they'll just fake your signature, they can withdraw money. They don't so much get cash, but they can actually move money from one account to another. It's much easier to move money than to withdraw money in cash. If you go into the bank and you want money in cash, it takes a lot more than if you just say, can you please deposit this into my account, or can you withdraw this and move it to this account? That's much easier done. There's a lot less to do when you do that in the bank. As soon as they have to give you actual cash, they're going to ask for a little bit more. And if you're not a customer of the bank, you have to do a fingerprint and all kinds of different things that they do in that case. But if there is no cash involved, it is a lot less. It's a lot less difficult to get to the bank. Avoid the overdrafts. Now, the regulations have changed in the overdrafts. It used to be that you're not overdraft protected, or they tell you you're overdraft protected. What happens is that they will actually do not have your check bounce if you withdraw more than you have, but then you're paying a rather significant fee. And it doesn't matter what the amount. If you overdraw your account by $5, you're being charged $35 for that. Which is a fairly high fee. If you look at it in terms of interest, you just pay $35 interest on a $5 loan. Now, you normally wouldn't do that. Now, the regulation was changed in that now the default is that you cannot overdraw, meaning that your check will bounce and your debit card will not work if you take out more than you have. And if you want it to go to the other way, you're going to have to opt out of the default and ask them, please do it the other way around. That just happened recently. It just happened a couple of years ago where they switched that around. From a consumer point of view, it's a much safer way. You'd rather have your check bounce, in particular with debit cards, because they've gotten much more popular than checks. Hardly anybody uses checks anymore. There used to be every Federal Reserve branch in the country was clearing checks. Now there's one. There's one place in the country where they clear checks. There were clearing checks at the Federal Reserve building here in Birmingham. The Federal Reserve branch in Birmingham. Until a few years ago, they don't do that anymore. There's like 15 people that work in that building. That's it. There's really not much going on in that building anymore because they took the whole check clearing out because they don't do it anymore. People don't pay with checks as much anymore because debit cards are so much more convenient and do the exact same thing. But if you go to the, if you use your debit card and you overdraw your account, you will have to pay. If you have set up that you cannot do it, then they're just going to tell you debit card is denied, or you can only go up to this amount, and it's not going to cost you anything. You might get embarrassed, but at least it doesn't cost you anything. And so from a consumer protection, it is great. The banks don't like it because there's a whole bunch of fees that they were able to earn that they don't earn anymore. And so you need to be able to understand those bounce protections where you are. Again, the default is that you cannot overdraw your account, but you can opt out of that if you want to and just go back to the way it used to be. If you see something wrong on your bank statement, tell the bank about it. You have 60 days. If there's any kind of error on there that you can prove, you have 60 days. So when you get your bank statement, make sure it's correct. Everything on there matches up with what you remember. You want to make sure that there's nobody who withdrew money from your account that you do not know about. You do have to make sure that everything is in line with what you remember spending. Make sure that you notify the bank of all address changes so that not other people get your bank statements. If they come in the mail and you did not change your address or forward your address or whatever, somebody else is going to get your bank statements with all your information, your account number and everything on there. You do not want that to happen. So make sure that that you do that. If you close your account, for example, because you're switching banks, you're not happy with the bank that you have, one of the things you have to make sure before you close the accounts in the old bank, that all of your checks have cleared. Now you might have written some checks, you might have set some things up. You have to make sure that all the checks you've written have actually cleared before you take all the money out of the old account. Because if they have not, then those checks are going to bounce. And that's going to get you in all kinds of trouble. So you want to make sure that everything has cleared. That's the one, it's cumbersome to change accounts. It is cumbersome. Now you have to change everything. If you don't like your bank and you want to set up something else, you have to make sure that your direct deposit is changed, your direct debits, you make sure that all your checks have cleared and all of those kind of things. That all goes with it. You have to be very careful. Now some banks will help you with that. The new banks that we're going to take care of most of it and we'll help you out with that. Some banks won't do it. It depends. But you have to make sure that all of your checks are clear. Every single one, that you don't have anything set up where money is directly taken out of your account. It's not so much a problem when money is actually being put into your account, because all they're going to say is, we tried, but the account is closed. Same with, so they're going to notify you that we wanted to send you a paycheck, but we can't. That's, the worst things that can happen. But the other way around, if you wrote a check to pay your electricity bill and that check bounces, you might not know. You still might believe, well, I paid that bill, but unfortunately you closed your account before that check was actually cleared, and the check will bounce. So you got to be very careful when you change accounts. What do you need the account for? Again, most of us use a checking account just because it's a transaction account. We need it to do our daily transactions, to have money available, to withdraw money, to make payments, pay bills, these kind of things. Be familiar with the fee schedule. Everything costs money. Again, it's a business, that's how they make money. They provide services to you, they want to get paid for them. There is monthly service fees. Some of them will be free, some of them will be higher. It depends on the checking account, and it depends on your needs. Now, what is it that you want to or do with that checking account? Now, how many transactions, how many checks do you write? Do you want to earn a small interest on your outstanding balance? Whatever it will be, whenever there's something extra to your account, you're going to have to pay for that. There will be a fee. Now, some of those fees will be waived if you hold a higher balance. Say you have an average balance of $1,000 or $2,000 in your account, some of these fees will be changed or waived. Sometimes fees will be waived because you have another prior relationship with this bank. For example, you might have a mortgage with that bank. And as a mortgage customer, or you have a home equity loan, they will mostly waive all of the fees. Because you already have the relationship with that bank, and they want to keep you. And then if you say, okay, I'm also going to have my mortgage payment directly withdrawn from the account or whatever, they will waive most of the fees. So if you have some other relationship with the bank, most of the other products are going to be free. But obviously, if you do not, then there will be a fee for these. There might be a per check fee if you go above a certain number. They allow you to write an X amount of check. And you can write an unlimited amount of checks against a checking account. They're just not all going to be free. They tell you, okay, you can write 10 checks for free, and every check after that, you're going to have to pay 10 cents or 15 cents or 25 cents, whatever it is, fee for every check that you write. Check printing fee if you actually want them to be printed out, if you want to have them with your account statement. At the end of the month, you get an account statement, and you might want the clear checks in that was coming back with that statement. They're going to charge you extra for that because it's an extra service for them because they don't really have them anymore either. They have to actually print them out too. Checks are being all scanned in these days and then are electronically sent off. Overdraft fee, ATM use fee. If you're using somebody else's ATM, there will be a fee. There will actually be two fees. One at the ATM machine of the other bank, and then your bank is going to charge you a fee too. So sometimes banks, in particular banks that do not have a large ATM network, will waive that fee. So they will not charge you a fee for using an ATM machine that's not theirs. And they might give you 2 or 3 withdrawals for free. In other words, they will reimburse you for the fee of the other bank. Those are banks that have small ATM networks. Credit unions, for example, do that because they don't have ATM machines all over the city. They might have 1 or 2, but they will waive the fees so that you can still use other banks' ATM machines. Bounce checks cost money. Stop payment, meaning that you wrote a check and you want to stop that payment. You say, okay, I wrote the wrong check, I wrote to the wrong person, or I'm not happy with that person anymore, whatever it is, and you want to stop the payment on that fee, on that check. There's a fee for that. Bottom line is there's a fee for everything. Now, there is a fee for everything that you do that goes outside the basic checking. There will be a fee, and it's good to know what those fees are, because some of them are rather substantial. Like stop payment fees, bounce check fees, overdraft fees are significant fees. Some of these other fees are not as high, so it's very important to know what they are. Just the different kinds of checking accounts. I already talked about the one that are free, the limitations on check writing. The free or low-cost checking accounts are very basic features. Very basic features. They like to give checking accounts for free to students, high school and college students, because for a bank, it makes sense to pull them into the bank. Normally, what happens is that if you have a relationship with a bank, you're not very likely to go to a different bank. You're just going to stick with that bank with all your future banking needs. That's what they rely on, and that's the only reason why students get free checking accounts, because that's how you draw them in, and then later on, they can get them for other services. There's banks that only have electronic services, or there are accounts where you can only use the ATM machines. If you actually want to talk to a teller or do a teller transaction, you're going to have to pay for that. Not every bank offers it, but there are some banks. Citicorp, for example, does that. Now, we do not have Citibanks here in this town, but Citibank, for example, does that, where you can just do your business at the ATM machines. You know, they're full-service ATM machines. There's all kinds of things that you can do at an ATM machine today. They call them now smart banking machines. And they can do all kinds. You do not have to put checks in envelopes anymore, for example. All you got to do is feed them in, they scan them, you see a picture of this check on the screen, you make sure that the amount is correct, you press enter, and it's all done. So things have gotten much easier. There's really no reason anymore to talk to somebody in the bank, unless you have something very special going on, and that's what they're going for. They want you to do as much as they can outside the bank so that they can get their costs lower. It's cost efficient for the bank if you use the teller machine. Teller machine doesn't need to be paid. So that makes sense for them, and the ATM machine. And so they will give you free if you only use electronic. If you actually have to go in the bank, they will charge you for that. Regular checking, there will be some, as I said, minimum balance to waive the monthly fee. There are interest-bearing checking accounts. The most important here being the money market deposit account. What you need to know about that is that it normally requires a fairly large initial investment or initial deposit. Some banks are going to ask for at least $1,000. Some might even ask for $10,000 as an initial investment or a deposit in that account. It pays a significantly higher interest. You can write checks, but you are limited, just like with the savings account, in how many checks you can write, how many transactions you can do in that account, and particularly with other banks. Now, some people use a money market account as kind of like an escrow account or something. Now, if you collect money because you have to pay bills that are, save up for bills that are paid quarterly or every 6 months, you put it in that account, you earn a higher interest, and then you can move the money into your checking account back and forth. You can do that as often as you want to. As long as it stays within the bank, it's not a problem. If you move it to other accounts, it's a different story. There's a limitation, and the same thing applies to checking accounts. If you do it too often, they will convert that money market account into a checking account, and what that means is they take the interest away. And money market accounts do not pay much, but they pay more than the 0.005% that you get in a checking account. And that's about what you get in interest on the checking account is 0.005%. So that's not that much. Check writing. One of the things about a check, if you write a check, and if you like the person that you write the check to, you want to make sure that everything is filled out correctly. The reason I'm saying that is because checks are being scanned in today. That's how they call it. It's all done electronically. Because of that, a check clears within a day. You might have noticed that checks clear much faster today than they're cleared like 5 years ago. Within a day, that check clears. That's because everything is sent electronically. The problem is the moment somebody makes a correction on the check, let's say you had the date on, you cross it out and write the date on top of the old date. They cannot clear it electronically anymore. By law, they're not allowed to do that. They have to clear it manually. So it has to be mailed, it has to be cleared manually, which is going to take longer. And it's going to take 2 or 3 days for that same check to clear. So if you like that person, you want to make sure that everything is on there correctly. Same if you get a check. I want to make sure that there's nothing crossed out, because you will still get your money, but it will take longer. It will take longer if there have some corrections been made to that check. You want to write the dollar amount in numbers, or then never leave any free spaces. So draw a line to fill out the entire space so that nobody can actually add anything to this. One of the problems with check is there's a lot of fraud. There's a lot of fraud in checks. That's why checks are not a particularly good and efficient means of payment, but people use it anyway. But there's a lot of fraud that goes on with checks. So you want to make sure that you have dollars and cents on your amount. So if you write a $100 check, don't just put 100 in there, but put 100.00 in there, so that you have dollars and cents written out, so that nobody can just add a few more zeros to that check when they get it. So write out the amount in words, so that people cannot change it easily, or change it at all. I remember giving a talk at a credit union, and I was at a convention, and they had vendors there, and they were selling pens. There were specifically made for writing checks. You could not forge them. You could not white them out. There was no way that you could actually get rid of them on the check. So you weren't able to forge the checks anymore. There's the memo field. It's optional. You don't have to fill anything in there. But if you want to remember what the check was for, when you see your bank statement, what you're going to get on your bank statement is a printout of all the checks if you want. And so, or you can go online and look it up on their website, and you can see a print of the check or a picture of the check. If you have a memo field on there, then you at least remember what it was for. If you do not remember, you write a lot of checks, you might not necessarily remember all of them. That way, you have some idea of what they were for, and then obviously you have to sign the check, or it's not good for anybody. Record the number of the check that you wrote, the date, what it's for. Do the same thing for ATMs. We're pretty good at keeping records of the checks we write. But we use ATM cards or debit cards without writing it down. It's the same. It is a check. It's just an electronic check. So the effect is the same, so you need to write down what this is for. What kind of fees, what kind of money you actually deposited to your account, and then you add all the credits and you subtract all the debits to figure out what your account balance is. You keep a track of that, you keep a record of that, because at the end of the month, you're going to get a check, you get a statement from the bank, and you want to reconcile that statement. That's one of the most important things, is reconciling a checking statement or bank statement, making sure that everything on your check register appears on the bank's statement. Now, sometimes some of those checks have not been cashed yet or have not cleared yet, so you deduct those out. What you have on your cash, at the end of all this exercise, what you have in your check register and the amount on your bank statement after you've taken out all the checks that have not cleared yet should be the same. If it's not the same, then you're missing something. And then you have to go back, and you have to go back in the bank statement. Because one of the problems is, you see a bank statement, you might have had a whole bunch of transactions, ATM transactions, checking transactions, and you don't really remember. You know, because especially ATM transactions, there can be a lot, and if you have checks, they're only going to give you the number of the check, and that's it. That's all you're going to see on your account statement, and you might not necessarily remember. So, oh, I have a discrepancy of $500. Where did those $500 go? And that's how you get yourself in trouble, because the problem is that you need to know on your check register how much money do I have. Now, there is something, this delay, what we call float, where your bank account actually shows a higher balance than your check register. Don't get yourself fooled in the idea that, oh, that means I have even more money than I thought I have. No, you don't. It just hasn't cleared yet. You know, so this is not extra money that you have. That's why you want to write it all down, so you know exactly how much money you will have after everything has cleared. Because if you write another check or have another ATM transaction, it's going to go on top of that. And if you do not keep track of this, you're going to overdraw your account, or you find yourself in a situation where your check bounces or your debit card is denied because you don't keep track. Now again, things have gotten much easier because you can go online with almost every bank, and a lot of them let you do it on your phone, and you can just check your account balance at any point in time. But again, that will only show all the transactions that have cleared and the ones that are pending. But if you send somebody a check and they have not actually deposited the check yet, it's not going to show up on your bank statement. So you still need to have an idea, you still need to write this down, even though you can pull it all off the internet, you still need to write down, maybe you know, if you have some software that you use for personal finances, when you come back from shopping, from buying groceries, whatever it is, write it down, put it in your software, make sure that you're keeping an up-to-date check register so you always know exactly how much money you actually have after everything clears. Very important. Banks offer you a whole bunch of other things. They give you loans, obviously. Again, that's the main business. They give you loans, they give you mortgage loans, they give you car loans, student loans. They manage your money, they manage your retirements. Banks can do so many things today. They can basically do anything that you need in terms of money management. If you want all that, it's a different story, but they can't do everything for you. So there's a whole bunch of different services that they offer to you. Now, we will talk about those kind of things later when we talk about savings and investing some more and how we get to these services and how we do all this. But one place to go for all of these things are banks. You can do everything money related in our bank today. So, for example, there was a time when we needed to have a broker for one thing and a bank for something else. Your bank can do all of these things today. Most banks can anyway. So you do not have to have different relationships if you do not want to. Okay, credit. Now, credit is one of those things that everybody wants to have, but nobody really knows how to get it. It is very important that you keep up. This is a credit report. where it lists obviously your address, your name, your social security number, and all of that. Make sure that all this is accurate, and it lists all the outstanding balances that you have. Who do you owe money, how much, and what's your credit balance. There's identifying information on the name, address, social security number. Specific information about every account is on there. Every account that you have, there will be specific information on your credit report. Federal bankruptcy record, tax liens, monetary judgments, all of that is going to be on there. And also, you will find out if somebody actually looked at your credit history. Now, generally speaking, people cannot pull your credit without your consent. However, what will happen is that if you, for example, you have a credit card, or you have a bank relationship, or you have a utilities company, or you're having a store credit card, or you're having a phone. When you signed up for these, most of the time you authorize them to check your credit. And they will do that, not just initially, but they're going to continue to monitor it. Like every 6 to 12 months, they're going to go back and they're going to inquire about your credit. Now, this is not going to count against you. There's a thing, one of the things that counts against you in your credit report is lots of inquiries. But inquiries that were actually initiated by you, because that means you're just shopping for credit. And that's a red flag for anybody who looks at your credit report. If it is people that you already have account relationships with, then people who look at your credit report know those are maintenance checks. They're just monitoring, making sure that you don't get into any trouble. Yes?
I've never asked for a consumer credit report. Will you be covering that later?
Yes, yes. That's going to be the next thing we're going to talk about. So you find all these things, and there's nothing you can hide. So if you have if you've had any troubles in the past with credit, again, if you have filed for bankruptcies, there are tax liens against you, if you have judgments against you, it's all going to be on your credit report. And it's going to be on there for a while, 7 years. 7 years, that information will remain in your credit report. What you also have on there is a credit score. Now, that credit score is the most common one that is being used is the FICO score. FICO stands for Fair Isaac Corporation. It's a standardized model. They're not telling you exactly how they get to that number. It's a proprietary model. They get actually money. That's why you have to pay for your credit score. When you see these commercials where it says freecreditreport.com and all of those, they're not free. They say that, but they're not free. Now they've found a way that they can say that without breaking the law, because they give you something for free, but not your credit report, not your credit score. You know, they do not give you your credit score for free because they have to pay for that, because it's a proprietary model. So the credit score is anywhere between 300 and 850. If your credit score is anywhere below 680, you're in all kinds of trouble. As a matter of fact, the average actually is 680, which is fairly low. Everything over 700 is fine. You know, 700. If you're over 750, you're considered excellent credit. Now, what do you need a credit score for? See, most of the things, well, I only need it for credit applications. So if I don't need any credit, what do I worry about my credit score? Wrong. There's so many other places where your credit is being checked. This is not a complete list, but for example, phone companies. If you go and you want to get a new phone, in particular, you want to get a cell phone, and you have bad credit, you are going to be charged a deposit. You know, not everybody, can go to Verizon and say, I want a cell phone, and they give it to you, and you walk out with a contract in your hand and a new cell phone. There's a whole bunch of people that walk out with a new cell phone contract and just left a $500 deposit on top of that. Because they have bad credit, the phone company needs to make sure that if you don't pay, that they have some money on record that they can use for you to pay your bill. The same is true for if you rent an apartment. Employers might look at your credit history and your credit score just to see how reliable you are. And not so much in terms of you're going to be a bad worker because you have a bad credit score, but it's more about If I have somebody who's in financial trouble, I need to make sure that I don't, lead them into temptation and give them in some situation where they might have access to funds that they could embezzle or something like that. That's gonna make me a little more cautious when I'm an employer. Graduate school insurances, same thing. If you want to get an insurance, if you don't want to leave a deposit for utilities, the same thing. You better have good credit. There's a whole bunch of different situations where your credit is checked that you don't even think about. And you're not really aware of it. You sign that contract and it says in there somewhere that you authorize them to check your credit. When somebody asks for your social security number, you can be fairly sure that they're going to check your credit, because that's what they need to check your credit, is your social security number. If they don't have your social security number, they cannot check your credit. But if somebody asks for your social security number, you want to make sure that you ask them why they need it. And they will then most likely tell you because they're going to check your credit. And somewhere you will sign off on that because they can't check your credit without your authorization. They cannot just take your social security number and run it and get a credit report. You need to authorize that. So there's a whole bunch of different situations. Again, credit scores are very important. They're determined by your payment history. How good are you in actually making the payments? Are you on time? How much do you borrow against your outstanding credit? So if you have a credit card with a $5,000 balance, if it's maxed out, that's a red flag on your credit score. If you have a lot of credit outstanding and you're not using it, that's actually a good thing. So one of the things that we always like to tell people in personal finance is don't have so many credit cards. The fact is, you should have actually 3 or 4 of them if you can handle it, if you're responsible enough to do it. You don't want to carry a balance on them, you just want to use them once in a while, because the more credit you have and pay off, the better your credit score is going to be. It is one of those things that, where this model, if you think about it, it encourages you to actually have many credit cards. Have many 5, 6 credit cards is a great thing to have if you are disciplined enough to not max them out and to actually do not carry balances on them. You just rotate through the credit cards throughout the months. The first week you use the one credit card at the grocery store, the next week you use the second one, and so on and so forth. You rotate them through, and you're going to have a great credit score. And you need a great credit score because if you ever pay attention, you see these commercials on television for cars. And they say 0% financing. At the very bottom, that nobody looks at, it says credit score 750 or better in order to get this. The same is true for leasing. You can lease this car for $199 a month. Credit score 750 or better. These offers that you see on television are just for the people with the best credit. When they're telling you that mortgage rates are historically low at 4%, yes they are. If your credit is 750 or better, they're at 4%. If your credit is not that good, they're not at 4%. And if your credit is at 500, you're not going to get any credit. They will not give you any money. So the credit score is incredibly important, and it's very important to maintain it. And the best way to do it is to pay your bills. Pay them on time and pay off your balances every time. Do not carry any, never max out your credit card. Do not carry more than 50, 60%. If you need to carry balance, do not go above that 60% level. That's going to negatively affect your credit. Very, very important to keep that in mind. Now, how do I get a credit report? I am entitled by law to get a free credit report every 12 months. Not a free credit score. Can't get those. You have to pay for those. But a free credit report, you can go, and again, this is not freecreditreport.com, this is annualcreditreport.com. That is a government website. And you can put in your social security number and you're going to get your credit report from the 3 main credit agencies. For free. Once a year, you're entitled to that. And you should look at your credit report, because that's what your creditors are going to look at. And if you do not know what's on there, then there might be some surprise. You might think that you have great credit, there's no problems, and then there's something on there that might be because of a mistake. It might be somebody else is messing with your credit. Yes?
Dr. Rodriguez, I just wanted to remind everybody too that any of your links in here will be on the website. So don't feel like you have to scramble to
Oh,
to get
okay.
it down. You know, next week we'll have that stuff up there and they can click through it there.
Okay, great, great. So again, this is a very helpful. Every 12 months you're entitled, once a year entitled to that credit report. You want to make sure that everything on there is accurate. If it is not accurate, you can ask those credit bureaus that are giving the information to investigate. And they will investigate. Effectively what they do is you see a charge on there that you're not sure where it's coming from. It might just be a credit card that you had 20 years ago and you don't remember. They say, what is this? They're going to inquire. And if they don't hear from that company within 6 weeks, they just take it off. They're just going to take it off the report. Yes?
If you go to that website that you have listed, will you have access to all three?
Yes, yes, yes. You can get them either one at a time, or you can get them all. So you can go back there numerous times. You are entitled to a free credit report from each one of those 3 agencies once a year. And that, again, this just happened 5-6 years ago, where the government required them to give you at least once a year that for free. It used to be that you had to pay for all of these. You also get it for free in addition to the credit report. Actually get your credit score if you get denied. If you get denied, you can call and will request your credit report and the credit score on which that decision was based. And they have to give it to you for free. They cannot charge you for that credit score at that point. Now, it used to be just a credit report, but just recent regulation also requires the credit score to be given to you at the same time. So that is if you're denied. If you're unemployed, planning to look for a job within 60 days, you have the right to get a free credit report. Because employers might look for you, might make sure that that credit report is safe. If you receive public assistance, because they're going to check your credit too. Yes?
Do you have any reports on the 3 agencies? Is one better or not liked versus another?
No, no. What happens is when you apply for credit somewhere, the bank or whoever gives you the money is not going to look at all 3 of them. They're normally going to look at do business with one of the 3. So what you want to make sure is that the 3 ones are consistent, that all 3 of them have the same stuff about you on the credit report, that there are no discrepancies between the 3, because they're not going to look at all 3. Nobody's ever going to look at all 3 of them. They're only going to look at one of the 3. And so you want to make sure that they all look the same. That they're not different. Different companies are going to report to them. You know, they only know it because it's reported to them. So in other words, you don't pay your phone bill, and you get a notice from your phone company. You get shut off. The phone company is going to report that to a credit bureau. They're not necessarily going to report it to all 3 of them. They might only report it to one. That's the only one that's going to show it on the credit report. The other 2 will not. Now, if you then go and ask for credit, and it happens that the credit is pulled from one of the 2 that do not show it, then you're lucky. It's not going to show up in your credit report. But, so that, again, the credit bureaus, they do not investigate on their own. But they get that information is given to them. And so that, okay, you did this wrong. The only thing that they know is public records, and they do search for those. Now, so if you have a judgment against you, if you file for bankruptcy, those are all public records, and they will automatically find their way into this, and very quickly. And this is, by the way, the worst thing you can do. If you file for bankruptcy, your credit is dead for 7 years. You are effectively a cash-only person for the next 7 years. There will be no credit for you at all. So it's very important that you don't do that. Yes?
Does it lower your credit rating, your FICO, if every time someone inquires into your credit rating?
It does if it was initiated by you. If they do the standard routine check on your credit, you know, all the creditors you have relationships with, no, that doesn't count against you. But if you apply for every credit card out there, that is going to have a negative effect on your credit. Lack of credit history has a negative effect, and there's nothing you can do about it. That's why I tell high school kids, the moment you can get yourself to a bank, open an account, because that starts your credit history. You can start your credit history when you're 14. You do not have that problem that you have a lack of credit history that counts against you, because it takes some time just to create credit history, and there's nothing you can do about it, nothing you can do to accelerate that. if you do it to that. It's just a matter of time. Over time, and everything else being the same, your credit will get better just because there's more information available about you, as long as it's positive, of course. Yes?
If you apply within 2 weeks for several credit cards, doesn't that count as just one inquiry?
No, every inquiry, if it's for the same company, yes. But if it's, if you're applying for one card at Chase and one at Bank of America and one at Discovery, those are going to be 3. Now, they're going to take a while to get on that report. They're not on there immediately. So, within the very recent amount of time after you did that, it might not show up, but it will show up eventually. Now, this does not hurt you as much as some of the other things that you do, but it will hurt you if you have a lot of inquiries. And because the idea is, why would you inquire or apply for 15 different credit cards? Mostly because you didn't get the first 10. And that's why that's why that is a red flag for the credit, for anybody who looks at your credit. Either you didn't get the first 10, or you're just trying to get as much credit as you can, and then you might max it out and be completely over your head in debt, and that's obviously not good for them either. So that's why they're very, very anxious about that. Yes?
I have an account where I'm the primary card holder, and my wife also has a card with her name in that same account. Is she developing a credit history by using her card?
Yes.
Even though she is developing a credit history?
If you can check it on the credit report, and it should show up on both of your credit reports. That card should be on both credit reports. Okay. If it's not, then you do not create a credit history. But normally, if you have a joint card, it will show up on both credit reports. Very important. Get all these different emails and letters about credit repair. You have bad credit. We can, you pay us money. We can repair your credit. No one can remove information from your credit report. No one can repair your credit. There's nothing they can do legally in order to get your credit score up. The only thing that will get your credit score back up is by doing the right things and doing them for a long period of time. It's just like losing weight. It's very easy to put on the weight, and it takes a long time to lose it. And credit is exactly the same way. It is very easy to destroy your credit, and it's incredibly difficult to get it back up. You can destroy your credit within a day. It will take years to get it back up. It's very important to understand that. And everything we have, because of automation, goes down to credit scores. Because nobody checks really into your credit reports anymore, none of that. It all goes down, when you hear about the bank giving you an approval within 5 minutes, that's because all they're looking at is your credit score. They say, if you have 700, we're giving you this amount of money. If you have 680, we give you that amount of money. If you have 650, you don't get anything. So that's how these models work. For basic consumer loans, if you apply for a Best Buy card or Home Depot card or things like that, that's how these decisions are made. It's purely based on your credit score. If you have a bad credit score, you're not going to get it. Or you get like a $100 balance or something on that card. So it's very, very, very important that you check on your credit report. Again, you can do it for free once a year, and it's very important that you do that. That there are no errors on there. You should dispute any errors on your credit report that you consider errors. And again, they will be taken off if they cannot verify it. Because they're not doing anything, but if you say, this charge is wrong, I don't have this account, they will inquire. And if they don't get any feedback from that company, they will just take it off. But you are the only one who can do that. There's nobody you can hire who gets calls and talks to the credit bureau and says, well, take this off and this off and this off. That's not going to happen. You're just paying somebody to do things that you need to do yourself anyway. So you should not do that. If anybody who promises you that can you restore your credit within a year, it's lying. It's basically what they're lying to you. They cannot do that. So be aware, there's a lot of scams out there because there are a lot of people with poor credit and they see this and say, oh, I can get my credit back within a year. You can't. What you end up doing is paying a lot of money for nothing. You don't want to do that.
Is there an advantage or disadvantage by not allowing your creditor to increase your allowable credit
Actually, it is an advantage because you now have more credit, which makes you more credit worthy. So it actually increases your credit score. What you do not want to do is increase, say, okay, oh, my credit card balance was increased by $1,000, let's go and spend those. That you don't want to do. Then that's a negative effect. But if you say you have a $5,000 balance and because you've been paying it off, then now increase it to $6,000, that's a good thing. If you do not then say, oh, now I can spend an extra $1,000. No, that actually helps you because now the balances that you carry relative to the amount of money that you can borrow at the max now are lower, and therefore that makes you look better. So that increase in credit actually works in your favor if you do not abuse it.
Well, I've always stopped sounds and so forth from going up on mine, so I'll shut up.
Yeah. No, that's a good thing. Again, as long as you don't get tempted to spend more, that's actually a good thing. Yes?
The other person asked a question about the single transactions, and it rings a bell somewhere in the back of my mind. Maybe it's applying for loans for real estate to get the best rate, or somewhere in the back of my mind there is this business of is it a single transaction, or is it, as you were talking about, like a whole bunch of different credit cards that wouldn't relate to each other at all?
It depends on, again, if it's the same, it might be that you talk to a mortgage lender and they require your credit twice or 3 times because of different things. It's the same transaction, but if it's different lenders, every single one is going to show up on your credit report as an inquiry. That's why when people say you're shopping for a mortgage, before you actually let them check your credit, make sure that you know this is the one that's giving you the best rates up front, because you do not want lots of people checking into your credit. That is not a good thing for you. And if it is a different transaction, if it comes from a different lender, because that's a different company and therefore a different inquiry. So, but sometimes they do a second and a third, maybe they pull your credit twice because for whatever reason. That is the same transaction if it's coming from the same company. But if it's different ones, then it depends on who initiated the check. Credit cards versus debit cards. Again, a credit card is an actually revolving credit. A debit card, that money comes out of your account. Until last Monday, we thought that we need to pay fees on debit cards. That's all been taken away. That's the market at work. First time I've seen that really in banking that strongly, where there was a lot of complaints about this, and the banks took it away. Just like that, within even less than a month, they enacted the fees and they took them back out. They don't give debit cards. Again, buy now, pay now. There's no interest charges on your debit card, because it's coming straight out of your checking account. You do not carry a balance on your debit card. There is a grace period on creded cards. There is freebies on credit cards. There used to be freebies on debit cards. They don't give you those anymore because they don't want you to use them anymore. Now they don't charge you for use. They just stop doing that, but they used to give you rewards points for if you use the debit card this, and they would give you rewards point to get discount here, discount there. They don't do that anymore because now it's not as lucrative a business anymore as it used to be, and therefore they don't want you to use the debit card. They want you to use a credit card. From a bank's point of view, it's much better for the bank if you use a credit card because they get a higher fee. So that's why they give you rewards for the credit cards. You might have noticed that all these credit cards are starting up with new rewards programs and all kinds of different things that you see on television, all these commercials, because they want you to use a credit card, because they don't want the debit card anymore. Yes?
I have a question about the credit card, because I always see that commercial for Capital One all the time. I was just wondering, because I heard Capital One has a lot of rewards and everything.
They do, and that's what they do is they want you to open a credit card with them, and they want you to use it. Because every time that you use your credit card, Capital One gets a 2.5% fee, on the transaction, and that's why they want. Not to mention the balance that you might not pay at the end of the month. Yes.
If you use a debit card or a bank card, if you use the bank card, and if you use a PIN number with that, is that still considered a debit card?
Yes, it is still a debit card if you use a PIN or if you sign for it. These are two different transactions in terms of regulation in terms of how they clear, but they're both debit card transactions. So, so when you use the debit card, even though you know it says Visa or MasterCard, it's still a debit card transaction. It always will be. You know, it doesn't matter if you use the PIN or if you use the signature. It's actually cheaper for the merchant if you use the PIN there rather than sign for it. But you know, they're not going to press you one way or the other.
Do you think one is safer than the other?
No, no, it doesn't. It doesn't make a difference. Again, it makes a difference to the person who accepts the debit card because there are slightly different fees on it. But from consumer's point of view, it doesn't really make a difference. Yes.
If you make a transaction and you get up to pay for it, and you give the card, and the person says, "Is it a debit card or a credit card?" And I say it's a debit card, and they say, "Well, I'm just going to run it as a credit card." Is that okay?
Yeah. Well, that just means that's the PIN versus the signature. It is still a debit card transaction. They're just, you know, lack of better knowledge. They just say it's debit or credit, and when they say credit, that means you're going to have to sign, and debit you have to put a PIN in. But it's still a debit card transaction that the money will be directly taken out of your account.
Okay.
You know, so that's just if you have to sign for it if you put a PIN in, but it's still a debit card transaction. Yes. Yeah.
When do the usury laws or regulations go away that allows the credit card companies to charge 29–30% interest on their cards?
Yeah. Well, that's the thing. Those have not gone away. Now I will talk about the Card Act in a minute. What has gone away is the fees that they can charge you. And that's used to be the way how they get you. They would charge you 14% interest, but then they charge you a huge late fee or something like that. They can't do that anymore. But there are some states have those laws, some do not. So, but they have to notify. There's a lot more. It's not as easy for credit card companies anymore to raise up that interest rate as it used to be. So the Card Act has done a lot in that regard. And let me actually get to it. There it is. Running way over time. So let me just, but it's the Credit Card Accountability, Responsibility, and Disclosure Act. That's what CARD stands for. Not important, but a lot of things that happened here. One of the most important things is that the credit card statement, you might have noticed, comes a lot earlier than it used to. You know, much earlier than before the due date. Now you will see a box on your credit card statement that says how much you're going to pay in interest if you only pay the minimum, and how much it's going to cost you if you pay over 3 years. I think that was probably the most eye-opening moment for most people when that statement came in the mail for the first time, which was in February of last year, or 2 years ago already, where that came in, where it said, last year, 2010, yes, where that came and it said, okay, if you only pay the minimum, it's going to take you 30 years to pay it off, and you're going to have to pay an arm and a leg in interest. Because they never had to disclose that before. Now they actually have to put that. It's on the top of the credit card statement every time. You have to actually have income to get a credit card. I remember when I started in college orientation, all these vendors were sitting up there giving you credit cards, phone cards. They're all gone. They were giving you free T-shirts. They were giving you free this, free that. They cannot do that anymore. The only way they can give you something now is if they give it to everybody. In other words, you know, you used to get a free T-shirt if you sign up for the credit card. Now, if they want to give away free T-shirts, they can still do that, but they have to give it to you regardless if you sign up for a credit card or not. They're not allowed to do that anymore. So they cannot reel you in with these things anymore. That is not legal. So you don't get these things anymore. If you sign up for this, you're going to get this for free, this for free, this for free. They are not allowed to do this anymore. They cannot charge you if you make a payment by phone. One of the things was, oh, you need to make a payment by phone because you were late, you only had a day left or something, or a same-day payment. You have to do it by phone, and they will charge you like a $30 fee on that. Can't do that anymore. There's limitations on how much fees they can actually charge you. There's no limitations on interest rates. So what that did is that, especially for those secured credit cards, where you actually have to have money to get it, like for people that don't have any credit, they would have them at a relatively low interest rate. Now they can, but they would charge you an enormous fee, which would equate to like 150% interest. Now they can't charge the fee anymore, so they charge you directly 150% interest. They actually do that if you carry a balance on those. You cannot increase the balances on an existing balance during the first 12 months of the account. That was one of the other things where they would give you an introductory rate, or you get a 6% introductory rate for the next 12 months, and a month later you get a letter that says, sorry, introductory rate is over now. We had to change our terms and conditions. That happened all the time. And the 6% introductory rate actually went away after 4 weeks. They cannot do that anymore. So there's a lot of restrictions. Credit card use has gotten a lot safer in terms of you know exactly what you're getting when you get a credit card. You have the annual fees for some credit cards, especially when they come with special programs. If you have like an airline credit card or something, there will be a fee attached to that. There's interest. The interest is charged on an average daily balance. You're charged interest daily on your credit card, not monthly. It's charged daily. Now, you have the grace period until the end of the month. So if you make a transaction at the first of the at the beginning of your billing cycle, you're not going to get charged interest for it until the next billing cycle. So if you pay it off by the end of the billing cycle, you never pay any interest. You do not have to pay interest on a credit card if you pay off your balance every month. But the moment you do not do that, you're being charged interest daily on the average balance. Cash advances, should not use your credit card for cash advances. They're incredibly expensive. That's not what they're for. That's why they're charging you for that extra. Convenience checks. Beware of the convenience checks. Because what they do is they say, okay, you can transfer money. You use this check, and this check, if you use it, you don't pay any interest on that balance for 12 months. But we're going to charge you a 3% or 4% transfer fee, which is the same as you paying interest on it. See, if you make a transfer balance and they're telling you, okay, it's a 3% transfer balance fee, but you have a 0% interest on the balance, you're still paying 3% and you're paying them up front. It's not free. Very important that it looks like it's free, but the transfer balance, that's where the cost comes in. Now, if you can get a transfer balance that's free, and then you get free interest for 12 months, that's a different story. But most of these transfer balances are somewhere between 3 to 4 to 5%. And a fee that the bank is going to charge you on the transfer balance. And that's effectively an interest. They just call it something different. Late fees, don't be late. It's not a good thing. Now you have 21 days. So you get the credit card statement plenty of time. So there should not be any more late fees. One of the reasons why late fees did occur so much because the credit card statement would come a week before the time money is due. They can't do that anymore. 3 weeks you have now, 21 days. If you use a foreign currency, there will be conversion fees. So not only is the exchange rate, but also conversion fees if you use your credit card abroad. And then there's certain transaction fees, depending on some transactions that you do. Look for a low fixed annual rate. No annual fee. If you don't want to have any special gimmicks with the card, you shouldn't be paying any fee on your credit card. Decide how you want to use it. Again, as I mentioned, beware of introductory rates and balance transfer offers. In particular, the balance transfer offers, because they're not free. There is a interest rate for it. Application fees. Some people will actually charge you an application fee for a credit card. It's not that often, but you need to be aware of that and know the difference between a fixed and a variable rate. If you have a fixed rate credit card, the rate should not change unless they notify you. If you have a variable rate, they will tell you it's a variable rate, and then they will put in what the rate is right now. And a lot of people believe that's going to be the rate now. But as soon as the base rate changes, it's attached to some sort of rate. Normally it's the prime rate. If that rate goes up or down, so will the rate on your credit card. That's a variable rate, meaning there will be changes in the rate that you're being charged on your outstanding balance. It's very important that you understand the difference between the two. Convenience user versus revolver should not be using your credit card as actually a credit instrument, meaning you should not be carrying balances on your credit card. That's really not what you should be using it for. Obviously, nobody would, the credit card issuers would not issue credit cards if people weren't using it as such, because there would be no money for them to be made if you were paying your credit card off. If you pay your credit card off every month, then that's a great thing for you. Because you actually buy it at the beginning or at the beginning of the month, and you don't have to pay for it until the end of the month. That's a great thing for you. There's nothing to be earned for the bank except for the commission that they charge the merchant. They will charge them 2.5% to 3% on each transaction. But they make the most money on you not paying it back. If you carry a balance, that's where the most money is made for the bank. From a consumer's point of view, you do not want to carry balances on your credit card. You protect your credit card, so make sure that, that they're not lying around. Only carry the ones that you're actually going to use. You might have 6 of them. You're probably not going to use 6 of them at the same time, so leave the other 5 at home, because that way you can only lose 1 or all 6 of them, or 6 of them will be stolen. There's no reason to carry them all with you. Now, I see people at checkouts all the time. They open up their wallets and there's like this whole array of cards. You're not going to use, and you're not going to say, okay, which one am I going to use? You know, you do have some idea which one to use. If you don't, you have a whole different set of problems. But you know, you go in there and say, okay, which one? You're only going to use one. Normally, we all have habits, and we should. You know, which card do I use for which things? If you do that, then it's much easier for you to keep track of your expenses too. So, you know, I'm going to use this card to go grocery shopping. That's my grocery card. Then when you go grocery shopping, that's the only card you need to take. And that's all you need to have in your wallet. You just set yourself up for, you know, losing them, having them stolen, whatever could happen to them. So you want to be very careful about that. Again, pay off the balance each month. Read the fine print. I say you do not keep more than 2 or 3 credit cards. That is for people that have a hard time controlling their spending. As a matter of fact, if you have a hard time controlling your spending, you shouldn't have a credit card at all. If you have a pretty good idea of what you can or cannot do, 2, 3, 4, 5 is not a problem. Just pay them off. Don't carry balances. And finally, we've all seen this. This is a little small, but this is what you find on every credit card application. It's called the Schumer box. There's actually a name for it. And the reason why it's called the Schumer box is because there's a senator from New York by the name of Chuck Schumer. And he is the one who introduced that legislation, and that's why it's called the Schumer box. So there actually is that. It has a name. The one that you get is every credit card application. Every credit card application has to have that in it. And that's been around for a long time. They do have to do all of these things. Everything that's in that Schumer box is going to have to be disclosed on that application.
We
so
can't read this.
Yeah, I know. I'm sorry. It's small because I have to fit it up. But if you get a credit card application, that's what you find out there. And again, it's just annual percentage rate. That's the most important thing. Again, they charge you daily, but they will tell you what the annual percentage rate is. What they actually charge you is that rate divided by 365. That's what you're going to be charged every day on your outstanding balance. Other APRs, meaning if there are APRs for different things, balance transfers, convenience checks, cash advances normally carry different interest rates. Grace period for repayment of balances for purchases. Sometimes you have some time to pay off your purchases. You get some grace period beyond the first credit cycle. Normally what the grace period is the first credit cycle. Method of computing the balance for purchases, so they will tell you how they actually calculate the average daily balance that they use to charge you interest. You know, they will have to tell you how they do that. What are the annual fees? What is the minimum finance charge? Transaction fee for balance transfers, transaction fee for cash advances, late payment fees, over the credit limit fee. Because one of the things that happen, just because you max out your credit card doesn't necessarily mean you can't use it anymore. They're just going to charge you extra fees for that. A bit up to a point, of course, you know. But if you have the minimum, if you have a 5,000 limit and you have 4,900, you're spending another 500, they will give you those 500, and they will charge you a good fee for the extra $400 that you use. And international transaction, what's the fee if you do a foreign currency purchase? Okay. Any questions? Yes.
Back to checking. I write maybe 1 check a month, and that's because the water company charges you a fee to do it online.
Yeah.
Is it dangerous to buy those checks that come in the newspapers, or should I just always order them from my bank?
You should stick with your bank.
Okay.
Your
Yeah.
bank is going to give you checks. If you only write one a month, so your checks are going to last a long time. So the initial amount of checks that you get, because they give you like 200 of them, they will last you a long time. So that's the safest way.
Yeah.
Just write checks off your bank account. Yes.
If you cancel a credit card, does that have an impact on your credit score or report?
As a matter of fact, actually it does. It could be negative. It could negatively impact your credit.
Even if you have not used that card, say,
Yes.
a store credit card in 5 years, and you cancel it,
If it has if it has a credit limit on it, then if you cancel it, that credit limit goes away, which means that you have less available credit, which makes you look worse as a credit, as a debtor. So if you have that card, even if you never use it, it shows up as available credit, and available credit that you do not use is good. Available credit that you use is bad, but available credit that you do not use, that makes you look good. So don't cancel it. You're much better off, just don't get tempted to use it. And if it doesn't cost a fee, for example, then just leave it, and put it in a safe place so nobody else gets their hands on it. But it makes a credit actually worse if you take it out. Yes.
Well, she brought up a question that I've been wondering about. The store credit cards, are they as important as the big ones, like Express and all that?
They're just as important. It's just credit, just like any other. Just you can only use it at one place,
right,
rather than use it at every.
Right.
But the carrier there's a credit.
Credit if
yeah,
you've got one of those.
Somebody extends credit to you, and that's what they want to see on the credit report. Yes.
Can a merchant actually charge you for using a credit card as opposed to paying with cash or check? Or is that violating the credit card?
They cannot charge you. What they can do, they can give you a discount for. And actually, what happened is they allowed. There was a time when you could only use, for example, a debit card for minimum transaction. Then that was taken away. But now when they changed the laws again, now merchants can again put a minimum amount on it. Say, okay, if you want to use a debit card, you have to at least spend $10. But they can differentiate in the price that they charge you for a credit card and for a cash transaction. Yes, they can do that. And they used to do that. Then again, they were not allowed to do it, and now they're allowed to do that again. Because the last piece of legislation was very much in favor of the retailers and the merchants rather than the banks. So their costs have gone down dramatically because of that. And so yes, they have a lot more leeway than they had. So they can differentiate the price, and you can negotiate for that matter. You go to a company, make a large purchase, and I can pay you cash, I pay you with a credit card. And if I pay you with cash, I want to get a 1% discount or 2% discount.